Hello guys, glad to have you on board again today. We have a lot to talk about today. We'll try to make it as quick as possible, but probably you have to expect at least 1 hour of recording today, even though we have no questions to talk about. We'll have to cover up many asset classes and quite important things to talk about. We'll start as usual with the cryptocurrencies, and this is one that has been moving quite a lot during the weekend and especially on Friday, as I was off, so I was unable to make your comments regarding that market in real time, but of course actions had to be taken care of back then, and I'm gonna review all those actions with you for full transparency as usual, and I'm gonna forecast you the prices I forecast to be tradable somehow in the next following days and months, as I think we just had a spike in volatility and that we can now expect some kind of nothing to happen kind of retracement phase, but with lots of FOMO trading. We're gonna have to digest all that thing that has been recently happening, and the thing is that generally it takes the form of a range, which suggests that right now, if you are misled thinking that somehow now the trend is on, I think we just flushed all the trend in those 2-day scenarios between the last Thursdays and Friday. We basically gave everything we had stored for a month in terms of trends. So we just concentrated this in 2 days, and now we're going to have to digest this for probably weeks. And so I expect ranges to form. And as you know, in terms of Elliott wave forecasting, which I'm using, forecasting the way we could build ranges is the most difficult thing to do. So for now, I have the least possible confidence in that market, especially because to me we're now switching into range mode, but the problem is I have no idea of what that range will look like. So I will simply apply what the strategy tells me to do in those contexts, which is applying the damn context, the range strategy, which is not overthinking things, not trying to forecast the prices as it's totally enabled to do it. You just can't. I mean, too many possibilities of range, and as we just start to build that range, will be totally stupid to try forecasting what that range will look like, as it hasn't even yet started. I think it's what's the most probable to come, but just don't know what form this will take. So regarding that uncertainty, the only thing you can do is trading risk-reward ratio, trying to figure out what the support area will be and what the resistance area is as well, and just trying to get decent risk-reward ratios to trade in between. And then whenever you are in a range, remember the context. Out of the context step, which is step 1 of strategy, you need to have a simple answer. What am I supposed to do? What am I going to trade? Am I going to search for bullish entries, bearish entries, and what kind of bullish or bearish entry? Is that a trend trading? Is that a range trading? And it's going to define either the potential of those trades, where you're going to put the maximum taking profit, where you're going to put the maximum stop loss, and where are the interesting risk-reward ratios to try. So, in my opinion, I think we decently have found a resistance in here. The minimum resistance is there, and the maximum price is the one we've been trading, meaning that in here we were unable to find buyers. I was in front of the charts back then when we made that upper shadow candle. Really, it was crazy. I mean, a single tick was making the price moving like that. I mean, that was enormous. It was like 0.05 per tick. I mean, just a single price move were that big, meaning the liquidity was that low that the price was moving and surging tick by tick, which was totally suggesting that we were in a totally illiquid market. And that's the major reason why I decided to take some profits out there. Those who were trading, who were following me on the Ripple scenario, basically I had Ripple. I still do. I have Ripple in my portfolio, but it wasn't necessarily because I wanted to, just to set things really straight. You know, I've been buying near those prices unexpectedly because I made a mistake with Bitstamp. I wanted to buy upon breakup of a resistance, and I basically executed a trade on the market. So I got executed instantly in a buying entry that I didn't necessarily wanted because I made a technical mistake. But anyway, out of that technical mistake, I said, okay, I'm going to keep that trade as I've been just executing $500, 500 euros, not exactly the same, but close to. So, executing 500 euros was, okay, you know what, I'm going to keep that trade, and of course I'm going to set a stop loss, because it was supposed to be a speculative trade. So I basically put a stop loss back then in here, but the problem is, whenever we did the exact same thing with the bitcoins and things like that, I decided not to remain and not to keep those stop losses, which led me to delete the Bitcoin stop losses, and it happened that in between I also deleted the Ripple stop loss. And I figured it out a few days after. I said, God damn it, why do I still have Ripples in my portfolio? It was supposed to be stopped out. And when I figured it out, it was so low that it was stupid to trigger a stop loss down there. So I said, okay, it's 500 euros. So I'm going to keep those Ripples in a buy and hold scenario, even though it wasn't expected in the first place. I really wasn't expecting that price to go positive before a month. And it happened to turn out true in last Friday. So when the guys in here in Paris told me, oh Phil, have you seen that Ripple is surging? I said, okay, well, it's surging, but how high is it surging? They said, we're 0.7. What? What the fuck? Is 0.7? So you say I'm positive right now, as I wasn't expecting something like that until a long time. So I said, okay, so now let me see, what does it look like? And this is when I just saw the price doing crazy, stupid, fast ticking out there with low liquidity. I said, okay, god damn it, I'm taking my phone and I'm taking 50% off. I'm taking the $500 off the table. Which happened that back then I put $500. Now those $500 of euros are back into my account in cash, in euros, and all the rest is just free Ripples. So I do have some free Ripples right now. I just get to take the profit of the investment that I made back then, and now all I have left is free Ripples. So I don't really know how this is going to go in the next few days and months. All I know is that right now, I don't give a shit about anything that happens in that market. It either goes to zero and I just lose nothing, or in the end, we're going to restore a bullish trend, which I think is possible right now, because this is nothing close to a market that is crashing. I mean, this is not compatible with a crashing market. We've now broken up daily resistances, not to say weekly resistances. So at that point, the market isn't compatible with a crashing market. So at best, we're ranging. At worst, we're already bullish. So bullish, I think, is out of context right now. I think it's too early to consider that bullish. So I would rather say we're in a bullish range scenario. A range that you will favor buying the lows instead of selling highs, but you absolutely want to take profits on the highs, which I've done. So I've done taking profit on that area. To be precise, I think I had 0.70 or something approximately like that. I obviously was unable to get the highest pricing in there, as it was really choppy price back then. But that's it. Okay, in terms of portfolio management right now, Ripple is out of risk to me, as I've been taking back the money I put it in. So free Ripples, and I keep those into Ledger Wallet, and I don't really give a shit about those anymore. So now Ripple is secured. Question is, are the other cryptocurrencies about to follow the same path or not? I really have no clue. Clearly this one was because of a fundamental reason. It was price driven for a reason. Now we'll see if other cryptocurrencies will have the same fate. If for some reasons we will to have some good news regarding Ethereum or any other cryptocurrency, and if it's about to trigger the same risk appetite and buying thing. As I think what we had in here is, as it's the first one to get out of crashing markets, it was the most violent one. I don't expect other cryptocurrencies to have that much money getting in there in such a violent move. As you can see, look at the volume in terms of historical volume. We had something totally out of normal. So I don't expect the money to move that fast in other cryptocurrencies, even if they have the same fate, meaning bullish news flow that led price to break resistances. If we do have this on the other cryptocurrencies, and I do hope this may happen in the Ethereum as well, but it's hard to forecast timing in there as this is news driven. We need to have news to push the price higher. And even if you do have this, you must not expect something similar. You might expect the same strength, meaning what's important in there is to have a look at what happened in there and just use that to potentially forecast targets on other cryptocurrencies. What we've reached out to out there is not necessarily price important. What I care about is what to cycles back in time have we retraced to. And as you can see, we've managed to get back to June's price and June's resistance and slightly try to slip away from it and slip higher than that. So we didn't manage to go that higher. We didn't invalidate the entire crashing pattern. We just managed to retrace back to June's level and try to install candle closes above it, but failed it. So if we do use that in terms of Ethereum, this is what we could have. To me, June's resistance is this one. I don't think we're going to manage to break higher than that. We've only managed to do it on the Ripple because of the stupid, crazy short-term momentum. And back then, when we were trading, as I said, the price was just crazy choppy because no one were trading there, just but stupid guys who were FOMO trading. So there was no buyers above June's level. So this is why I think the resistance for us is going to be in between the two latest resistance. I think this one, and I don't think that the Ethereum, if we ever go up, is going to be able to break this level. So $630 is absolutely maximum resistance, and I think you shouldn't price in the price to go higher than that. Reaching out to those levels is good enough because we're going to break resistances, but I don't think we'll have the strength to break that monthly resistance. I think this one is the one we may take care of in a potential wave 3. So consider that as a ranging scenario in which we're switching from bearish to bullish. We'll have to respect the wave strategies out there, meaning what we might be about to do in the Ethereum in here will be a wave 1. Wave 1 only goal is to terminate, is to visibly initiate a reversal. So it generally looks like a range, which means end of the previous wave do get to be deeply retraced, and this is what makes the entire thing looks like a range. So wave 1 generally has a rangy kind of price action when you look at the overall trend scenario. In the big picture, this will just look like a range move. So you don't want to be fully confident in here and thinking about trend trading. It is going to be the first glimpse of a future possible trend. So what you want to do in here is to make some money and get some interesting speculative trades. This is where you want to be fully leveraged. So what you're doing in here, once again, is a long-term speculation, what we call a buy and hold. But right in here, this is all you can do. This is where you want to eventually use some leverage, or at least putting some more money into that market. So what we're doing right now is clearly not putting 50% of your entire capital in there, but just sparing a tiny amount of your capital to make a buy and hold. So as said, 10 to 15% of your global asset valuation is interesting to do, and you do that without a stop loss and you get ready to just lose it all. But taking 50% of your entire asset getting 50% of your entire assets into Ethereum in a buy and hold scenario to me seemed to be like a great idea. So if we do get this right, and if Ethereum is about to pump like just like we have done with the Ripple, and I think we can very well have it in the next following days, then if we do have that, there will also have to be a taking profit, just like it was for the Ripple. If we go to those resistances, you do want to take profits, not entire profits, but basically taking away the amount of money you've been investing. So I personally, and I've been fully transparent there, I've been putting 7,500 euros, no dollars, in that market, and I'm ready to take that money off the table if we do reach out to those prices. It's basically going to be a multiplying by 2, which means I'll take 7,000 off the table, and I will have the equivalent of 7,000 still in, but without risk anymore, which means I'll take those $7,000 off the table, but probably going to reinvest those at lower prices later. So speculative investment, buy and hold, maximum risk, the risk to lose it all, and if it gets validated, you just validate the scenario, which means you take the money off the table, but not to because there is a risk, just because you want to take that money to buy again, but you certainly don't want to take it all off the table in here. You just want to spare 50% off, or at least take what's necessary to get you the money you've been investing. So once this is cleared, you just have free Ethereums. Just see it that way. You can just do the buy and hold in a weekly to monthly perspective, and at that point you just bought and you get the fuck out. You just don't think right now, and you just don't do that risk management like I just said. I will do it because I remain a trader. I'm not an investor in terms of psychological pattern, my psychology makes me a trader, not an investor. An investor will just buy and get the fuck away and just wait for a few months and years to get to the target price we've been highlighting before. And if the price goes there, taking a gain. If the price doesn't go there, probably taking a loss. That's how it goes for an investor. It's not going to overthink things. I remain a trader, which means I'm taking the same entry as the investor will do, but I'll manage my risk in between, because there will be some pullbacks, there will be cycles, and I want to profit from them. So obviously needs to be bullish on Ethereum. To me, it's not a question anymore. Have to be bullish in there. It's just either you're going to not manage the risk and play it like an investor, and then this is too late to do anything right now. You're just a buyer and you wait. That's all you have to do. Or you're going to be adding some spices in there and both making investment and speculation in the same time, which means you're going to manage the risk on the way up to the potential targets we have to forecast. So this is where I think we're going to have a resistance. So what you want to do in here, and as I said, wave 1 is generally going to look like a range. So expect some deep retracement on wave 2 and probably expect some kind of range strategy. Normally we should have at least a DOM trading area, which means a price area in which we're going to get to build a lot of volume, and we generally will have lots of uninteresting prices that all the DOMs will trade, and you as smart traders doesn't want to trade. You want to trade the boundaries. This is what you get. This is where you want to sell. This is where you want to buy. This is where you want to let all the DOMs exchanging contracts and exchanging Ethereums one to another. You just don't give a shit about those price. This is just price for stupid traders. So I think right now anything above 500 and $20 is interesting to take profits. And I need to be clear in here. I didn't say sell. I said sell what you bought, and partially you take partial taking profits in here. That's all you have to do. You don't sell. Okay, now we might be bullish ranging. In a bullish range, you don't want to sell the highs. You just want to take profits and buy at the lows anytime you get a pullback. So this is where you want to sell. Anything above $520, any bearish signal is a taking profit. Now, below $200, and let's say $300, but anything below $300 is going to be a buy signal. So any buy signal below 300 is something you want to buy, eyes closed. But first, we need to get there, validate the market top, and then we're going to buy the retracements, okay? So I show you the long-term scenario right now as what we had in the Ripple recently just changed it all. Now we have something to forecast in other markets, because I think Ripple was just the first of many, not that many, but this is what it will look like when an altcoin gets out of long-term trade, of mid-term to long-term bearish retracements. Those markets are trendy, are bullish trending, and they one by one will figure out the end of their crashing patterns. And now we have a clear sight at what it can look like. It will be somehow similar but different on other, of course. As said, probably not that violent of a momentum, but we can still have to forecast the same targets. Slightly lower targets than what we had, so I don't expect the price to break above June's level, but most likely expect them to go near those levels where we should find sellers and where you should look for profit takings. Alright, so that being said, right now I'm just basically waiting to have the Ethereum to eventually trigger something, but we're going to need a catalyst out there. We're going to need something to make people buying, and so far we don't. All I can see is that we had lots of volume on that peak, on that valley in here, and I'm just wondering where we should have the pumping, which means I think buyers have been buying out there. This is why the nice increasing on the volume. I mean, look at that fucking historical volume. The 20-day average volume is the biggest it has ever been. So yes, we didn't execute it that big of a volume in a daily basis, but in a 20-day averaging volume, we're as high as we've ever been. So this is the biggest historical volume we've had for years in Ethereum. On a support, on a monthly fucking support. So we could go slightly lower, but don't expect the price to go further below. We're not going to surge to $90 or whatever shit this is. We could just go at $20 lower, $30 at best, but that's all we can do. I mean, making it another dip, but from what I can see right now, volume is more than enough there. We can start a trend at any time right now. We just need a reason to do it. So if nothing shows up, if we don't have any catalyst to trade, we'll basically just eventually make a lower dip. That's possible, but anyway, we're just going to wait for something to buy, and at any time this can show up. The volume is ready for it. We've got a positive news flow on the entire cryptocurrency sector, which leads me to believe we just need the FOMO thing. We just need something that is going to make the price surging and people buying. So I'm waiting for this. I have absolutely no clue about the timing. That's the thing in here. We just can't anticipate that. This is why we make the damn buy and hold. So I'm waiting to have confirmations from price with a catalyst. And if we don't have it, yes, we can go slightly lower, but I don't give a shit about that. I'm a buyer, I'm holding. This is what we've been talking about for months. So now waiting to have this thing validating, just like the Ripple did. I mean, no one could have anticipated this, and I don't expect to anticipate what could happen in Ethereum or any other cryptocurrency market. It's just going to be a news flow driven market. And you have no fucking clue about the news flow, or you have informations I don't. And if you do have those information, please mail me. But I don't think you have either, so you're just going to have to wait and speculate. So it's a speculative positioning in here, but in a buy and hold scenario, as you should be ready for everything, okay? It really is, you're investing into something, you just don't know how it's going to trigger, you just hope it will. And if it doesn't, then that's how it is. I mean, basically, you've been investing in something that will never worth anything. And if that's the case, then you just lost it. And that's part of the game. You expect nice gains in there. You know there is an associated risk. This is why you don't want to put more than 10 to 15% of your entire asset management. You don't want to be more than that. It's just one asset and could very well not be the right one. If it is, obviously we're going to make huge money out there. If it isn't, then we're just going to lose it all. So you don't want to lose all your money into a single bet. I'm trying to teach you this out there. I think a 10 to 15% risk is decent, but shouldn't be more than that. So moving from cryptocurrencies, the same thing happening in the Bitcoins. As you can see, June's level are in here. So to me, I think Bitcoin can go there, but shouldn't necessarily break the resistances right now. So I think we could have a pump, but a tiny pump and nothing that you want to buy. So I think Bitcoin could just get to break this resistance, but I think we're not going to go that high. I think we could just slip slightly higher, so you don't want to be FOMO buying Bitcoin if we go to 7,500, for example. I said, and I stand on this, if we go fucking higher than 8,500, this is what you want to consider exiting the crashing market in Bitcoins. So I think Bitcoin can just remain into the desert fucking crossing phase. So as usual, and as I said, and just as I said for Ethereum, this market will be fundamentally driven, which means we need a positive news flow, but you're not just buying the news, you're buying when people will buy the news. So you need to have both price reaction and positive news flow, which so far we have positive news flow. Clearly we have, but the price isn't surging, so this is not something you want to validate. In here we got a bullish sine wave, so cycles are now bullish in terms of Bitcoins, but we do have a bearish momentum. So it's kind of a fight back in here. We've got bearish momentum, bullish cycles. That's the first time we have a bullish cycle with a bullish price as well. As you can see, we haven't broke a support. So it's the second bullish pattern with higher pricing. Back then we broke the supports. Now we haven't. So we might have rising support building with bullish cycle. So this is why sine wave is detecting this cycle to be bullish. We'll see if the prices are following through or not. But we clearly need a catalyst right now. So in terms of Bitcoins, I'm buying only if we have the break up. So breaking up 8,500, as long as we do not, I wait. So I've been clear on this. To me, Bitcoins are not mature enough to trade and to buy until we manage to break 8,500. And if I do get there, this will not be a buy and hold. This will be a speculative breakout trade. So low leveraged, I'm not going to put $7,000 or euros in Bitcoins. Clearly not, as we don't have the same scenario to trade out there. The only reason that will lead me to make 5,000 euros into Bitcoins is if we make the desert crossing phase. So I expect for some reasons, I mean right now to me the most probable, but in here I don't want to anticipate because we have too many choices. We could just go there, and I think right now we're going to just, and after that we're just going to retrace it back then, get back to one more time the apex of that triangle and just dying out there. And it's whenever I'll have that dying phase that I'll be ready to make the buy and hold. So to me, still way too early to consider that a one battle. So I want to see the Bitcoin, if it has to surge for any reason, because the Ethereum is surging or any other thing, I don't think we can go much higher than the 7,500. So I don't want to buy there. It's too risky. I'd rather like the market just go there, FOMO trade, and just die again. And I think that's that dying pattern I want to buy. The reasoning here is simple, and I've always been clear with that. To me, Ethereum and Bitcoin have different price structure. Both were bubbly traded in terms of price action, but in terms of the patterns I do use, in terms of my context, on my strategy, to me, Bitcoin has to be traded as a bubble who's crashing, so a crashing market context, where Ethereum isn't. To me, Ethereum is a bullish range or a bullish market. But anyway, it is a retracement. And this is different to me because I'm looking to buy Ethereums with technical patterns. It means the psychological effect into Ethereums are just dampened to me, where they are maximum at their maximum into Bitcoins. I will trade Bitcoins regarding psychology. I need to have the psychological patterns triggered first, and then comes the technicals. Technicals will just be used if they support the psychological pattern I look forward for when I do trade a crashing market. And I stand on this. To me, in terms of Bitcoins, I want to see two things. Either we go down with a huge volume and we'll trigger stop losses and we trigger the despair pattern just because we fuck up all the long-term speculators by a nice bearish raking pattern. Option number two, we just fucking die in here and the volume gets to be inexistent. And whenever we'll have this, I'll be ready to make the buy and hold. But in between, I still can't trigger the psychological pattern I want in that market. So either graphically we exit from the crashing structure by breaking that resistance. This one isn't enough. So I want this one to be broken up to forecast the end of the crashing pattern, and I will trade that with a breakout pattern and nothing close to a speculative trade. The only way I can speculate in that market is to have that desert crossing phase or that bearish outburst. Only two solutions to me. So I'm waiting for either of those two, but just for now, nothing that leads me to push the buttons on Bitcoins. Moving out from cryptocurrencies, it's half an hour already, and as I was clear in there, we had lots to talk about today, and especially the fact that I'll be off for a week. So today is the last show for 2 weeks ahead, because I'll be leaving into Geneva for the rest of that week. I probably won't be able to make a show on Friday, so if I can do this, we won't talk again before October the 8th. So lots of things could happen. This is why I rather like to forecast you many of the possibilities I have to forecast. And obviously it may be one of those or eventually something totally different, but I want to cover as many things as possible, as I won't be able to make a daily following of the market in the next following weeks. Of course, if very interesting things happen, I may reach out to Twitter or Telegram and reach out to you this way, but in terms of daily market forecasts and video tapes, I won't be able to do it anymore until the 8th of October. So moving into other asset classes, we're going to cover all the forex market and the big swing that might be at play in the next following days and weeks. So something I clearly expect to be showing into prices during my vacations. So things I will clearly have a look at and will trade even if I am on vacations. I'll have my cell phone. I have different trading alerts on all those big levels, on all those big assets. And if things do triggers the way I expect them to do, you can be damn sure I'm going to leverage the forex. All the scenarios, we're just going to review them entirely today ahead of the next following weeks. So I guess we should start with forex indeed, and we're going to just do it right away. So we're going to look through the three major currency pairs, the DXY, the EXY, and GXY, which is dollar index, euro index, and yen index. We're just going to forecast those three. So in terms of dollar, we're going to start with the bigger one. I think this asset is bearish, but it's going to be bearish ranging, which we call wave 1. I think we're in wave 1 territory in here and nothing close. You should consider this as a range price structure, nothing close to a big long-term trend. Where we're going to trend is not now, is on that wave. So don't expect the dollar to just slip through and fall apart. I don't think it will be the case. All I think will be the case on the opposite is the fact that we may reach out to support in there, but not necessarily going to fall apart. So you don't want to be heavily bearish on the dollar. You just want to be bearish on dollar. So to me, the direction for this thing is to reach out to that support. So this is where you want to take some profits, as once again, partial profit taking, not entire profit taking on the bearish dollar assets, but the bearish dollar currency pairs. We're going to review those. As you know, I'm trading USD-JPY, I'm trading USD-CNH, USD-MXN. I'm also trading euro dollar, and GBP dollar will be impacted by the dollar. So whenever the dollar index is going to reach out to that price, which is the 200-day moving average, we're probably going to have to support the price in here. We may slip a little bit lower for technical reasons. That wouldn't be a problem. But in here, you need to start thinking about profit taking on your dollar assets. Partial profit taking. You're not going to take it all away, but you're just going to secure the gains, pay for the stop losses, and forecast to sell any retracement you might be available to. Consider this as a wave 1. We're going to wait for wave 2 pullback. Generally, wave 2 is deeply retracing wave 1, so you should expect some pullbacks in both euro dollar and anything that is dollar related. It's not right now that we're going to have bearishness. Forecast this to be a first wave. So as I said, don't take that for timing and anything. I don't know where those dots have to be put. The market will, this is what makes the beauty of markets. You can forecast things, but you just don't know how they will put in terms of times and amplitude. I don't know how deep the wave 2 is going to retrace. All I know is that in terms of swing tradings, I expect a bullish swings to happen in here, and then a bearish lower swing to happen before triggering the trend. And I don't know if we're going to take multiple months to retrace the wave 2, or if it's going to be a tiny sharp retracement before breaking down. I just don't know. All that is unpredictable. Okay, so when I say you will never ever be able to control the market, this is what I mean. That dot, I don't know where it is, and neither I do for this one. All I know is that in here, you might expect some bullishness, short-term bullishness in terms of that trading, as it's not going to break resistances anymore. I think. So we're going to manage the risks because this is what you think, not what you know. You never know. We could go higher and the dollar could just go there. So if the dollar goes there, do you really want to handle holding a short position in there? Of course, no. So there will be a risk management. But if the market is behaving that way, this is where you want to make maximum money. Okay, you prepare for the trend in here, you take huge amount of money if it goes right. And if it goes wrong, you don't want to lose that much, you just want to wait to get to the point you will be right. Okay? So dollar remains bearish to me, but rangy bearish. So the context, range bearish. You're not looking for buy entry, and any buying entry on the blue areas is going to be a partial taking profit. And anytime you get retracements and bearish sine wave and bearish double signal, you do want to trade those signals, obviously. Now, euro is the opposite to me. We are ranging bullish, but the problem is we're below a resistance. We're into the 50 period Bollinger Bands in here. So we're in 50-day volatility standard deviation, which means in here we can find some buyers, but it's basically buying a fucking resistance. So you don't want to be buying right now in terms of euro. You just want to let it retrace. You just want to secure the gains if you were buying euro dollar, and this is what I've been doing. I've been triggering gains on euro dollar buying entries, and now I'm just waiting for retracement. I remain bullish on euro dollar, no questions asked. Bullish euro remains a scenario I do trade. The thing is that we're trading bullish ranging, which means you want to buy low and you want to take profit high. So this is what I just fucking do. I take my profits on that resistance, I wait for retracement, and this is the area I want to buy, the lower boundaries of the range. Okay, so I'm waiting for retracement on the euro and basically waiting for this to happen in the next following days. I mean, we've been fucking gapping up on the euro, and I think this is what we may trap some buyers in here. So I expect some strong reversal patterns to occur on the euro. We're trying to trap people in, and we probably will do in the next following days. So we're going to talk about the euro pairs. So to me, euro is impacted by EURJPY and euro dollar. So we're going to cover those two pairs, and I'm going to tell you what I'll be looking forward for in the next few days. Yen index right now, we're right on support areas, really long-term interesting buying entries for the yen. I don't know how the market will react to this. All I know is that on last Friday was a bullish session. We gapped down, searched for a support, found it, and closed high. Now, today, we've already broken that high, so I will see. We've got two options. Either today is going to be a bullish day, or either today is going to be bearish, and we're going to close lower than the previous Friday. I expect clearly second solution. So to me, yen is bullish. Is more than enough ready to do it. We've been squeezing the momentum in here, so we are ready to explode at the high. So it's either we're going to break that support, and the squeezing pattern will trigger to the downside accordingly. The problem is, right now, we're trying to squeeze, but we're losing the momentum, and worse than that, we haven't yet broken the support. So if this is a fake breakdown, just getting there to find some very interesting long-term prices, which I think is the case, if we do this, it means that in here we're going to find long-term yen buyers, which is generally riskier stock market. If we do have a riskier stock market, meaning people buying yen as a security, if we do have that movement, means that we're going to have a flight to safety, which means lots of dollars will fly away from equities to go into yen. We're going to safer the trades, means lower dollar, which I said is highly probable, bullish yen, which means the fucking dollar yen is going to be the hugely trending asset pair. Should be the most trending currency pair in the next following weeks, if I'm right, because this is where you should have the best odds of profit according to the scenario I have. But once again, I do have projection. Doesn't mean the market will make those true. They can make them wrong, and if they're wrong and if I'm false, I just don't want to lose more than I could expect in terms of gain. So the thing in here is that you need to assess the targets, the potential reward you have to assess how much risk you accept to take on those scenarios. And in terms of yen, I think right now we don't have that much to risk. To me, we shouldn't break this down. We shouldn't go lower than that, which means we have a very tiny stop loss in terms of yen. And in terms of anything related to yen, and I do trade EURJPY, NZD-JPY, and USD-JPY, I think if the yen is making any candle close below that level, I will invalidate all those scenarios. I'll get out of those, and you know I'm leveraged on EURJPY. So it's going to be a huge loss out there. Clearly will be the case, and I'm not going to fly away from this one. If it happens, I'll take my loss because I have to. My balls are on the table out there. I've been putting leverage. I cannot take and handle maintaining a losing trade when it's leverage. It's never going to be happening. I don't teach you that, and I'm not the kind of guy who teach you something but doesn't apply it. If I have to take a huge loss on Euro-Yen, I'll take it. The only reason that will have led me to that loss is because the market will wrong foot me. Show me some bearishness and then fuck up me up. It can happen. It already happened in the past. Can happen tomorrow. I wouldn't necessarily be surprised. I will just take a huge loss. As a leverage trader, if we go there, I cannot handle holding the trades any longer. So I can handle the price to go there. Going above that is not handleable to me, which means I'll have to lower the leverage accordingly. And if I have to do it, it means taking a loss. It's not going to be a tiny loss. As for now, my average price on EURJPY is approximately here, and I'm leverage 3, which means I'm having some kind of big loss right now. I'm losing approximately 6%. But just to set things really straight, this is far away from the usual risk management I have. You know my rules. I'm generally risking 2.5 to 3%, but this is for speculative trades. In here, I wasn't speculating anymore in the EURJPY. I mean, this was a fucking double bearish signal. I had to be leveraging here, obviously. Now the market is wrong footing me. Problem is, how do you handle those patterns? Do you really want to take all the risks and then just lose it all at the market's high before it collapses? Or do you accept some kind of, do you give some room for the price to work that area before giving you right decisions? I don't want to exit the EURJPY right now. I have no signs of a bullish market. I have just signs of an excessive market trying to chase stop losses, and I certainly don't want to give away my stop losses in here. We're in 50 periods, standard deviations, right in a fucking range, so we're nothing into a bullish market to me. We're just fucking surging to try chasing stop losses, and I don't want to give mine in here. But I have to manage the risk. I cannot just take an unlimited amount of risk. So 6 to 7% is approximately the maximum I'm handling out there. And I do this for a single reason. I'm just reinvesting previous gains. Okay, I've been making approximately a 20% gain on the downside in here, and I'm reinvesting those gains. So if I do take that 7% loss, it's going to be a huge loss, a wrong footing loss. And the market can be wrong footing me sometimes. But anyway, it will still leave me with a 13% gain on the EURJPY. This is all I care about. I've been winning on that currency pair anyhow. I'm not going to lose more than I've been winning, and clearly will not risk that much. But if I have to lose 7% in here, I'm ready to take that. Okay, just because I've been winning already on that currency pair. Otherwise, I would just have taken my loss already and wouldn't even be talking about that right now. But I'm here for transparency. This is not something you should do. Just I'm here to explain you how I trade and why I do take some decisions. Only reason that allows me to take that 7% loss and to accept it if it has to be the case is simply because I have reinvested previous gains. Okay, and if for some reasons I see the EURJPY still trying to surge above those current levels, I will have to reduce the leverage. Leverage 3 is nothing I can handle right here. I have to take some partial losses if we maintain bullishness on the EURJPY. And I think right now we should be bearish. It's just a matter of time. We've been breaking the previous day's low. We're not yet breaking the previous day's high, so I expect ready to some bearishness in here. I'm just waiting for that price to retrace. I'm waiting for the EURJPY to fucking collapse. And it will, I think, whenever we will have terminate to chase the stop losses. So I don't want to be one of those who will be taken away by the market top. So I'm assessing that risk. I'm clearly looking at this one every single day to just be there if I have to take the decision. For now, I just don't want to. So I'm waiting for, because I think we're narrowing odds of that market to be bullish. We're just trying to go as high as we can or hold as long as we can in there, but I don't think we're going to hold much longer in there. So I expect EURJPY to be one of the most bearish as well in the next following days, simply because it tried to chase stop loss, and I expect it to be bearish, just like the opposite of that bullishness. So as you can see, we stayed a few days out there, volatile, and then brutal reversal. This is where I got wrong-footed. I started selling right here, got stopped, tried again, took some stop losses in here as well, but I still remain bearish on that market no matter what. I'm just now fucking waiting for it to happen. We're 61% retracement. I don't think we're going to handle any candle close above that level. We're just going to try go every day, fail until we get the brutal bearish reversal. Usually what happens in a range, we're into very interesting selling prices of a range, and everybody thinks this is a bullish trend. So this is the best case scenario to have a brutal bearish reversal. Just like I got fucking wrong-footed in here, I think we're going to wrong-foot the bulls in there. I was heavily bearish in here. I got wrong-footed because to me that market was bearish and it happened to be ranging. So when you're bearish on a support of a range, this is where you get wrong-footed. But I think this is the same exact stupid decisions that the bulls are making right now by buying that high. You're buying below resistances, and worse than that, you are probably fucking buying a range that is a bearish range. So odds are still to the downside to me on that range, and we're high on that range, which means I should be selling in here, but I'm obviously not selling anything as I'm already too much into selling in there, and I cannot put additional money in here, obviously. So waiting on the EURJPY, but closely looking at that asset, waiting for reversal signals to just go back in there. And obviously, if we retrace to the mid-range scenarios, this is where I'll get to validate the trade and put some more money back in. Meaning I have a very low average price in here, but I'm fucking ready to put some additional money in here. I'm still bearish. It's just the market tried to wrong-foot me. It's my job to manage the risk tightly enough to just don't surrender the stop losses without taking too much risks in letting some room for the market to work this out. Okay, so this is what I'm doing in here. It's kind of the hardest trade I have to manage right now. It's definitely the biggest loss I had in months, but I need to handle this one. I generally don't get wrong-footed in a leverage scenario. It can happen sometime. Generally, it happens once a year at best. And it does happen to me right now on the EURJPY, so take that as a huge loss. And now in here you see how a professional is managing a huge loss. It's the worst case scenario to me. I hate those trades because this can lead either to a fucking huge loss that I hate, or it will lead me to a very huge gain as well, but I need to work myself on that scenario in here, and this is really hard to do. So if you want to see how I do react in hard positions, this is clearly where you want to test me. So this is where you see the difference between a professional and a noob. I know I'm down the corner in here, and that's the worst case scenario to me. Generally, I manage to never get myself down that corner. Now I am. So see and learn how I do handle things. Just don't try to copy me out there. Really, I need to be clear on this. Don't try to copy me on the EURJPY. I'm just managing a trade that really went worse, and I got wrong-footed with leverage, which generally doesn't happen to me. So EURJPY is a trade I need to manage, not a trade I want to be fucking aggressive on. So I'm just waiting right now to get to restoring that trade to positive value, in which I will be much more comfortable to get into putting some more money in the trend, which right now I think we're just wrong-footing me in some kind of unexpected range pullbacks. NZD yen, I remain heavily bearish on this one, no questions asked. I think this one remains bearish. This one as well has been trying to wrong-foot me by that unexpected pullback, but I think anyway, why now? We're going to be ready to break down and trigger the trade. What will happen back then? So this is where I go leverage. This is nothing like an invalidation. This is where I get validation, sorry. So if we retrace back to the mid-range, we remain bearish. So this is a bearish range. So obviously I would like to sell in here, and I told you last week that I was reinforcing both the NZD yen and the EURJPY, but I took tiny reinforcement on EURJPY and nice one on NZD yen. So I'm still bearish on those assets. I remain bullish on the yen, and I also take USD JPY. in the pocket, still waiting for that trade to trigger. So right now I remain speculative on speculative on NZD GPY, but I'm maximum leverage for a speculative trade. So this is where I took more risk right now. I'm just waiting for this one to validate. Whenever it gets validation, I'll go leverage on NZD yen. For now I remain leverage 1, so maximum leverage for a speculative trade. So other assets, GBP USD, we have to talk about this one. Got a brutal reversal last week. We are double bearish on this one, so I hope you are no longer leveraged on that market. I am no longer. I've been triggering partial taking profit on that target as expected. I'm still bullish. Clearly I am, but we are now back to 2 on 5 as we have a double bearish. So you just remain bullish, but you want to buy low and just take the profits at the high. So as we have double bearish, you either wait for the market to break that double bearish or to retrace to interesting prices. I'm taking option number 2. I'm now waiting to get to interesting prices to buy on the GBP USD. So euro dollar, I remain bullish, but I want to buy low. I want to buy the support areas of the range. I remain bearish for now on the EURJPY for those reasons. I think euro is going to bearish retrace, and we don't have a bearish euro. Clearly we don't, but we do have a bullish yen. So not yet bullish euro with bullish yen. I think EURJPY is going to go lower and get me back to positive values in which I'll be much more comfortable to trade. As right now, I hate being in that position when I have a leverage position in a negative trade pricing. I hate that. That's the worst case scenario. I generally don't get myself on that nice T positioning, but I do. I am right now, and I really want to share that with you. Instead of hiding that loss, I want to talk about this one because this is where you could learn a very tough lesson about how a professional handles a big loss. And once again, I say big loss. I'm not saying I'm losing 20% capital out there. It's just 6%. It's nothing. And moreover, I'm just taking a loss after a gain. So I'm just losing part of the previous gain. That's really important for you to get that. Otherwise, we wouldn't even talk about that. So now we're going to talk about the USD pairs I'm trading right now. So USD yen, we're already taking care of this one. So all those I have in portfolio, which is USD CNH, USD MXN. I remain bearish on those one. I'm still waiting for the price to validate, which means I'm waiting for the price to break down supports, and whenever we'll have those triggering. I mean, as you can see, the alert was just triggered back then as we just reached out to that price, but we haven't managed to make a candle close. So the market is trying to recover once again. We're just fucking ranging, waiting for the swing to trigger. I expect that market to make another bearish trade in the next following days. It's going to be a range trade once again. Those pairs have to be profit taken on supports, okay? It's a retracement first. So if we go there, you obviously want to take partial profits. So I don't know why we do have that sell entry in here, but just to be straightforward in there, I think we should have first profit taking on that support or slightly below, and I think target number 2 has to be set on 38.2. You just don't want to target lower than that. You target the Fibonacci retracements, okay? I think 23.6 is going to be to be going lower. So I target us to go to 38.2, but you obviously want to take profits if we go out there. All right. I remain bearish, which means after that, I will just take partial profits, wait for retracement to put some additional money, and then get to forecast a potential trend reversal, a deeper retracement. But for now, I forecast us to just go there, eventually trying to get 50% retracement, but you obviously have to be profit taking in here at least. USD MXN is pretty much the same thing, but with more bearishness. I think this one is bearish trending. USD CNH is not bearish. It's a range. So you trade that accordingly. The context is ranging. So when you go low, you just take the profits. USD MXN is a bearish asset. So in here, you want to forecast a trend. So right in here, you can put additional reinforcements. You can put some money out there, and you can target lower prices. You can target bearish breakdowns of those supports. Obviously, we're going to break this one. I think we could break this one as well in the next bearish impulse of that asset. So this is the forecast I have in there. I forecast the price to go there, pullback in here, eventually terminate the trend in there, and then having a deeper pullback, retracing back to those resistances. So at least in this one, I'm not taking profits until we manage to break that low, which I think is going to be the case. So then I'll be waiting for profit taking patterns in there to just trigger profit taking, waiting for retracement, but we'll have additional bearish waves in there. So you remain bearish on USD MXN no matter what. And then finally we got AUDNZD. This one is really the toughest one to trade right now. It's just trying as hard as it can to go lower, but no matter what, no matter how hard and no matter how bearish the signals are, the bulls are still holding in there, and we're just waiting for the bears to surrender. So we do have bearish pressures. Clearly that's the case in here, but we do have bullish support. So bearish risk, bullish support. I don't know how it's going to finish out there. I still hope it's going to be bullish, because to me the long-term trend is heavily bullish. So bulls are supporting, but they're supporting for a reason, because we do have a bullish trend. So I'm just trying right now to wait to have that damn bullish signs validated and really straightforward through the chart. So I need to have those supports holding, and I want to see that resistance failing. But right now we're just waiting in between. It's been 2 to 3 weeks. Momentum is totally in existence, so we got taking profits, so nothing close to a bearish pattern in here. It's just bulls are out, bears are out, we're just waiting. But I think the bulls are stronger because the bulls have a long-term view, a longer-term view. They're seeing the bigger picture, and they will surrender. They will be tougher into battles because we're having to see the bigger picture in here, as the short-term sellers are trying to catch up with tiny retracements. Okay, so if I do have to manage the risk as well, I will do it here. That's also one of the leverage scenario I have. So if this one has to go breaking supports, as I'm bullishly leveraging here, I'll have to manage the risk as well. So this one is one of those assets I'm clearly having a look at day to day. I'm watching closely this one, but for now I see no reasons to panic, and I'm just waiting in there. Okay, so we'll just see how it goes. But as long as we don't have bullishness restored on that market, I remain patient. Okay, closely watching all those prices, but patiently waiting for those. We got lots of catalysts coming forward regarding the NZD as well. You know, last week NZD was the big game changer because we had bullish signs on NZD, which forced AUDNZD to retrace. Now I'd like to see some bearishness on the NZD that will lead us to decorrelate once and for all the AUD to the NZD. So I'm waiting for this. We'll need market catalysts for this. I hope those will be the good ones. As long as it isn't the case, we might have deeper pullbacks, and if we do have, I'll have to manage the risk. But anyway, AUDNZD, I remain bullish on this one. It's just I don't know if the trend is mature yet or not. If we're mature enough to trigger the trend, I'll get to make huge amounts of money on this one. If we are not ready yet and have to go lower, I'll have to manage my risk because my average entry price is right here. And if we go there, I just don't want to go negative like I've been on the EURJPY. Clearly doesn't want to. So if we go low, I will lower the leverage to buy at lower prices. Obviously, I will do buying only on the IODNZD. The question is, if we have to go lower, I have to put the stop loss in here, which is unacceptable. Okay, I'm leverage 8 in this one. 7, sorry, leverage 7. So consider this, I'm here. This is where I put the stop loss. I don't want to take 7 times this as a potential loss. It's not possible. I do have some gains already in the pocket in AUDNZD as well, but I'm clearly not gonna risk that much. Okay, so if we go there, stop loss has to be there, means I have to take my profits, wait for further informations, and buying later. Okay, so if things go worse and we break that low, I'll have to reduce the leverage, obviously. It's going to be a win taking here. It's nothing close to the EURJPY. If I have to trigger stop losses in here, it's going to be stop win. So I'm going to take gains and wait for further informations to get back in that trend. But I will have to do it before getting into negative values, which I had on the EURJPY. That's it for the forex. US oil, this one is a big one to is a tough one to trade, as today will be a game changer. If we manage to handle the candle close like that today, means that we're closing above the resistance I've been trying to trade. So speculatively trading, the stop is in here and is handleable. So I remain bearish in there, but I'm not going to put additional money unless we get a double signal in there. So I'll wait for that area to be traded, eventually taking a tiny reinforcement there. I remain bearish. Last time I've been selling in there. As you can see, trade is not doing well, meaning even if we had double bearish, the market doesn't want to trade that price and wants to go higher. So I'm just going to wait for further information in there. And for now the candle hasn't closed yet. We could very well retrace all that shit, close there tonight, and that will just be a stop hunting that will basically reverse in the next few days. But for now, price seems to don't move accordingly to the double signals, so we'll see how it goes. I have no regret for that positioning, but for now the price isn't just moving accordingly. That's why speculation is made for. I know what I'd like to see, but the market isn't responding accordingly now, so I need to let some room for the market to work out. This is why you don't put leverage, to be able to move the stop loss accordingly to what the price will show you. You try to anticipate the market, but you never will be able to do it with any kind of certainty. So regarding that uncertainty, you need to remain speculative in order to be able to move those stop losses. So to me, stop loss must remain out there. As long as we're not there, I'm not triggering any stop losses, and I'm just managing my risk in between. I started to get bearish in here. I will be bearish again in there if I do have signals suggesting I'm not the only one. Alright, so regarding commodities, that's how I will trade this. Regarding the gold, I'm fucking bullish no matter what, no matter how long this will take. I don't know, but I remain heavily bullish in there. Anytime we gotta fuck up that resistance is going to be a trend trade. And I forecast us to make pretty nice extensions to at least 200%, not even to say 261% are probable in there. So next wave is going to be the trendy wave. Look at the structure, clearly a wave 1 in here. Wave 2, the worst case scenario for bears in here. Wave 2 is what we call barrier triangle. Okay, so we've been testing the resistance 3 times in a row, building higher supports every time in between. So as we've done that, that's the strongest bullish consolidation we could have. So we're bearish consolidating, but with the most bullish kind of consolidation. So obviously next wave is going to be trending if we are bullish. I could be wrong, okay? If that market is going bearish means I'm wrong, but if we go bullish means we're going to be trending right after this. Everyone will be bullish on that market. So obviously we're going to have to take money from somewhere else. And from what I can see, bullish yen, bullish gold is fucking saying just one single thing. US equities are going to suffer huge if I'm right. I can be wrong, but suggesting this, all the market is positioning ahead of risk rising in the next following weeks. And we'll see about that. If it triggers, I don't see any reason for the market to hold. To me, equity market cannot hold supports. If we do have bullish gold and bullish yen, we have no choice but to take the money off the table from equities and put it into safer areas like the gold, and the yen will probably be the biggest amount of attracting money. Will be the assets who will attract the biggest amount of money. So I'm waiting for this to go. Obviously, it remains still in late speculative stages, which means we're ready almost to go trending. But as long as the market hasn't proven you right, it can still prove you wrong, and you shouldn't be losing any huge amounts of money if that's what's to come. So you still need to remain speculative. I think maximum exposure to speculation, so leverage 1 is okay. You must not lose more than 3 to 5% in here. That's the maximum loss you should be able to take on the gold. But of course, you need to put yourself ahead of the breakup of that resistance, because if it happens, you want to be leveraging here and you won't hesitate to make reinforcements. So if that happens, of course, US oil is going to retrace. US oil is led to the growth. So if we do have bullish gold and other things like that, obviously we're going to have bearish US oil. So I expect all the markets to go according to my long-term scenarios and long-term views, but I need to have the damn confirmation. And if I don't have them, gold can be bearish, euro yen can be bullish, US oil can be bullish as well, equities can be bullish. I don't make the market. I just do speculate on the market and take appropriate amount of risk to forecast what I think to be true. And if I'm proven right, I'm taking huge gains. If I'm proven wrong, I don't want to take huge loss. That's all I do. Okay, you really need to see it that way. Other market I'm bullish on, and you clearly know about this one, is the yieldings in the euro area. To me, the rates are going to increase no matter what, no matter how. So last week we had some kind of pullback, rapidly bought out by the market, and I expect this to keep on going forward for the next days. So I remain bullish in there. Futures expirations are early December. So anyway, I remain bullish on that market as long as we haven't reached out to this target or the expiration. So as for now, I'm bullish in there and just waiting for things to happen. Even if we have bearish equities or bearish risk, I think the money isn't going there because these yieldings are clearly not enough. I mean, you're just going to get 0.5% return by buying the bonds. So fuck it. I mean, nobody. Obviously, we're going to have some bond buyers because of the safe haven demand. But I don't think we're going to have more than that. So I expect some kind of ranging in here because people are going to buy bonds and people like me are going to sell those bonds to get higher yields. So we're going to have buyers and sellers. So I expect some kind of range in there, but I expect this to be bullish trendy afterwards anyway. Okay, so expect some sideways action in here. Don't expect the market to just surge. If we do have bearish equities, obviously we're going to have some demand for the bonds. Same thing goes for the 10-year yields. I expect the 10-year to go ranging in there, okay? But I think in the end we're going to surge anyway. So this one has trending possibilities toward 3 and 3.30, 3.50. These are all the prices we could forecast. But I'm not trading this, okay? I'm not trading this anymore. I've been trading all this. But I'm not trading this anymore. This is a wave 5 to me, so we're just searching for price extensions, and I don't want to be that bullish on those things. I just think that we're just close to huge problems in the US and just need a catalyst out there once again. I just don't know where it's going to come from, but I think we can expect some catalyst to come in the next few days. And if it does come, the market is ready to switch to risk on to risk off. So this is what you clearly see right now. The market is profit taking and we're retracing that week. So we're ready to handle some problems. We just don't know if we do have problems already. We need reasons to go lower. That's what I think. Right now, from what I can see, I'm used to see this. The market is waiting for something to go lower. We don't have that something yet, but I think that anything can be a good candidate right now. We just need to have reasons to do the bearish return now, the bearish reversal. So the market is waiting for something to trade, and so should you. You should be ready for that market to collapse, not collapse, but retrace, at least in the first stages, which means it's going to be looking first it's going to look like a pullback, and then it's going to look like worse things first, okay? But I think we still need to have one more bullish impulse. What we're doing in here probably just a wave 4 retracement. So risk off mode before a final risk on, and then market collapse. Regarding the SPX, I don't think the Nasdaq is going to do anything close to this. I think the Nasdaq is just ready to plunge no matter what. So in terms of market asset allocation, you clearly want to be fucking out of the Nasdaq assets. If you're investing in all those shits, be ready to fucking suffer. Because if something has to go down, it clearly is this one. To me, it's the most mature market to just fucking crash. It's the one that's holding the best right now. But if it goes down, it's the one that's going to go down the first, the most brutal one. We clearly have 30% downward potential in here, simply because all the components on the Nasdaq are bubbles, or most of them are bubbles. All the bubbles you know about. Tesla is not a bubble, but is under bearish pressure. Apple is a bubble. Google is overpriced. Facebook is as well, and is already crashing. So we've got everything we need to go lower. Nvidia is a bubble as well. Netflix has been crashing already, so we have lots of bearish potential in there. Amazon is a bubble. Twitter has already crashed and has lots of bearish potential. Boeing is buying right now, and that's the only one supporting the Dow Jones regarding its weighting in the Dow. The Dow has been surging just because of Boeing, and I'm going to show you. We're going to talk about equities right now. So as said about all this one, Speculative bearish on Apple, speculative bearish on Tesla, but already triggered some profit taking in there. I still have 50% of that short entry running. I'm still bearish on Apple, waiting for signs of collapsing on that asset. So until we manage to break those lows, I'm not reinforcing Apple. And I've just been stopped out on all other equities in here, so I'm just waiting for those to trigger bearish signals, and I will get back on those trades anytime we got signals in there. We don't for now, and we've got Boeing. So to me, I'm gonna, this one is gonna be something I want to talk to you about, because it might not be really the easiest thing to understand. Yes, we're under resistance, but I'm gonna buy Boeing, and I'm gonna tell you why. I know this is really heavily fucking risky to buy Boeing, but if equities want to survive, the only asset that to me has potential for growth is this one. It's Boeing, because we can go higher in here and just take, for example, a 10% vertical move, bubble kind of trade clearly. But if equities wants to be bullish, I think this is one of the equities that can produce some gains. I'm going to take tiny position in here, but just if I have to be proven wrong in anything else, I mean, EURJPY is going to break up resistances, the yen is going to break supports, the gold is going to break down supports, equities are going to survive, Apple is going to reshape for another bullish impulse. If we have to do this, I mean, I want to take some gains somewhere, and I think Boeing is an option. I don't want to buy Apple, because you know about that, but to me, Apple is clearly overpriced. Boeing is also, but it's showing some fucking strength, and I have more confidence into giving money to Boeing than giving it to Apple, which is just fucking buying its shares with it. So that's how it is. I'm not buying that damn thing. And final thing, General Electrics. We're reaching out to the long-term supports. I wait for an ABC structure in there, so I'm not buying that low. I'm just waiting for supports to hold in here, having some kind of pullback, and then second bearish impulse. So I expect this to be made near the $11. In $11, clearly I'm going to put some huge money on General Electrics. I made a few speculative trades back then. I do have some remaining trading positions in here for a long run, but I'm going to take the long-term investment prices in here. I mean, buying real General Electric shares near the 11 pricings if we do respect the ABC structure. So I want to go there, buy two bearish waves. I'm not buying this one yet. I'm waiting for stabilization, second bearish impulse, and this one is the one I'll be buying. So I'm closely waiting in General Electric, and everything goes as planned, but just we're one step closer to the end. I'm just waiting for those intermediate steps to terminate first. Alright, so I'm going to put the alert in here. Clearly I will. Need to be aware of the price. So that's basically it regarding equities. So you know how I will be trading regarding equities indices. I see some bearishness, but not necessarily end of the world kind of bearishness for S&P 500, because we may just be in a wave 4 in here, but I see end of the world kind of trading in the Nasdaq. I wouldn't necessarily take the Dow Jones as too bearish right now. It's just made historical highs, so I just let it go on this one. This is why I think Boeing can be bullish and be supporting the Dow Jones, where the other might be just losing it all. We'll see. I mean, right now I'm ready to go bearish, but only on the Nasdaq. I don't want to be too bearish on SPX, and I don't want to be too bearish on the Dow Jones. I've been taking short entries on both the SPX and the Nasdaqs on Friday. I already took partial profits on SPX, not yet on the Nasdaq. So I remain fully exposed in this one, partially exposed on that one. So this one is already secure. I basically made a 50% profit taking this morning, so my stop loss is paid for SPX, not yet for Nasdaq, but I have fully confidence in this one to be bearish. So we'll see about that. All right, I think at that point I want to have bearishness on the Nasdaq, because if this one goes down, it's gonna be fucking going down, not just a little. It's just gonna collapse. But first of all, I want to see Apple going down, which we're not doing today. As you can see, Apple is bought. So we'll see how it ends today. But if it ends positive, which means we won't have the necessary timing to get into shorting the US equities. And if we're not, then once again, yen is going to try ranging, euro is going to try surging, and dollar is going to try retracing to get and attract the money. But we need some problems in the equities. I see this highly probable, but I want to see the price responding to it. No matter how strong I have feelings about something, as long as the price isn't proving me right, I don't get fully leveraged or overconfident in those markets. So short in Wall Street must remain speculative as long as it hasn't been proven right. Long entries on gold has to be speculative as well. US oil has to be speculative. All those scenarios. So only things I have confidence into are AUDNZD, because as you can see, price is not responding accordingly yet. EURJPY, I still have conviction is going bearish, but the price is proving me wrong, which is the worst case scenario to me. But we've already talked about that. I remained bullish on interest rates, so bearish on bonds. I remain slightly bearish in equities, and I remain bearish on those stocks, and I'm ready to jump on all those, Tesla, Apple, Facebook, Nvidia, Netflix. I'm ready to short all those ones and putting some more money out there again if some bearishness has to be showing up, because these ones will be the first to fall apart. I'm eventually going to buy Boeing, but really as a hedge. I don't have confidence on this one, and I will be loving to be stop lost on this one. I'm not buying right now. I'm not buying under resistance. I'm buying if we make a second daily candle close above that resistance. For now, we haven't. Okay, so if we do have daily candle close above that level, I'm taking tiny long entry on Boeing. I have no confidence on that trade. It's just if things has to go bullish, I want to make some gains because I'm going to take losses out on any other scenarios. So I'm going to take multiple tiny losses. I obviously want to have a gain to come up for those losses at some point, and I think Boeing can be a reasonable candidate, even though I have absolutely no fancy to buy US stocks right now. If there's one to buy, might be Boeing, but as I said, taking a loss in here will be a pleasure. All right, so that being said, I'm gonna wish you guys a pleasant week ahead, eventually 2 weeks if we can meet on Friday, and if that's the case, then I'll be happy to meet those who will get to the conventions into Malta next week, as I'll be there. And once again, if you want to meet, that will be a good pleasure. You're just gonna you can just reach out to me by emailing me, and we'll of course set some meetings out there. So you just reach out to me, or anyway, we will meet again on October the 8th at the last, in the longest perspective. If I can make some shows out there via from the laptop, I'll be pleased to do some if I have the time to, but I just don't want to engage myself on this. So, bye guys, once and for all. Wish you good trades. Be really, really cautious right now. If we do trigger those risk-off trades, obviously Wall Street's not gonna like that. They've been trying to avoid this for months, which means if it turns out to be true, and if we have to trigger the risk-off trades, it will be brutal, and people won't like that. So we have 4 to 5 months of stupid trading to erase if things have to go dirty. So please don't get to fucking buy supports, and don't go into them buy the dip scenario. If you see the market collapsing, just let it fucking go. We've got lots of room to the downside. We've been planning for this for months. Don't be among those guys who sell Wall Street. Take tiny speculative loss after tiny speculative loss just to don't take the final bearish trade. If it goes fucking bearish, you put your money out there and you take the gains. That's how it goes. I won't hesitate to put money if Wall Street shows some risk of trades. But for now, I need to see these fully straightforward, visible on the charts. All right. So as I'll be on vacations, I might not get instantly to the social networks to tell you if I do take some bearish trades and things like that. So Don't wait for me to give you the signals. We've been working this out for weeks right now. You know what to do if it shows up to be true. Don't hesitate. If you think this is right, you don't put all your account in there, but you need to be ready to double down on the position sizings if turns out to be true. All right? And of course, as if that's possible, I'll try as hard as I can to get as fast as I can into social networks to tell you what I've been buying, what I've been selling. Just once again, for the transparency purposes only. I'm not a signal seller. I'm not here to sell you my signals. I'm just here to share the signals as much as I can when they have some educational purposes. And we do have a lot of educational purpose right now. So obviously, if I do take those trades, I would like to share them with you as fast as possible. Bye guys, enjoy trading. If you do have questions, you can email me, but just be aware that this will take more time than the usual timing to answer. So don't expect an answer in the 24-hour schedule. Might be taking 2 to 3 days to get your answer, but if you have questions, you can ask them anyway. Bye guys.